Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Richard Buxton, manager of the Merian UK Alpha Fund. Hi Richard.
Morning.
So we can't talk UK without talking Brexit, unfortunately. I suppose the big question is, how concerned are you about Brexit?
Well, I'm taking my cue from the currency market because sterling is judge and jury on this, and to my amazement, sterling remains remarkably sanguine. It's quite well bid. So, the markets are telling us, don't worry, we're not going to have any sort of horrible no-deal exit. But and similarly, sterling-related, UK domestic shares have actually been rallying. So. I think we've just got to work on that basis. I still think there is a risk that at some point the market slightly panics, that it's clearly going to go to the wire. But what I think is clear now is that it is beginning to have a real economic impact. We have been growing very nicely at kind of 0.5, 0.6% a quarter, and that's now down to kind of 0.2, 0.3. Business investment, business confidence, consumer confidence, it's all beginning to have an impact. So I think of this as a bit of a handbrake on the economy, that the moment we can release the handbrake, then actually I think we will surprise positively in terms of growth through back end of this year into 2020, which is why I'm pretty upbeat about the UK stocks. We're on 13 times this year's earnings, which is pretty much in line or below our long-run averages. International investors have kind of abandoned UK. So I think if we can release the handbrake, then actually the UK will positively surprise. We've still got a very, very vibrant labour market. We've got a huge entrepreneurial dynamic in the UK, lots of net new business formation. But we just need to get the B word done and dusted.
And if it's not Brexit then that is perhaps clouding your horizon, is there anything else that you think that UK investors should be concerned about? Or is it indeed a relatively positive picture, as you seem to be painting?
I think for the UK, we're not in a bad place. Clearly, globally, things are slowing. Things look really very, very sluggish in Europe. And I don't know quite what the European Central Bank does for an encore, because, they haven't even raised interest rates yet, and they kind of need more stimulus and help. I think, the US, obviously the jury is out, but I suspect that it's kind of soft landing. Last year was an extreme sort of sugar rush because of the tax cuts. But I don't think it's an imminent recession. Again, the bond market, everyone's obsessively watching the yield curve, the difference between long and short rates, and as that has narrowed, it's traditionally a harbinger of recession. I don't think that that'll be the case. I think that the US will just be returning to kind of trend growth. So they're the kind of big macro pictures to look at. But as I say, the UK I think is slightly different because of Brexit, and I think, as I say, we can get through this, then actually there'll be a kind of sigh of relief. Even consumer confidence, I think, will pick up, because people are kind of fed up with talking about this, including me. So we just kind of look forward to say getting beyond that. Now, the bears would argue that, well, we're just swapping one form of uncertainty for another, because we'll then have 2 years of these transitional arrangements and having to negotiate what our true trading position is. I suspect that's not going to impact activity and behaviour. I think people will just go, well, at least we've made some progress. We have got a deal of some sort. And actually, as I say, the return to the fundamentals of the strength of the labour market, wage growth. We've got 3% private sector wage growth. The government has signalled end to austerity, so I suspect that over the next year or two you may actually see some public sector wage growth. So I think, yes, we'll actually surprise on the upside.
Richard, thank you very much. This is Emma Wall for Morningstar. Thank you for watching.